Hey everyone, welcome to the KE Report and a company update from Scorpio Gold, chatting with the CEO, Zayn Kalyan. We are going to be talking about Scorpio's, again, refocus in Nevada at the Manhattan District, those projects, and the sale now of non-core asset, this Mineral Ridge project. Going to get Zayn to explain the really strategy behind that sale and that ongoing drill program at the Manhattan District. Scorpio is traded on the TSX Venture Exchange under the symbol SGN, on the OTCQB under the symbol SRCRF, and the Frankfurt Exchange RY9. Now, Zayn, let's start off by talking about the sale of the Mineral Ridge project for a total of US $7.5 million. The deal is announced. It's not quite closed yet. This money comes in stages. Start off just by explaining this deal and the stages of payments, when you expect to receive the total $7.5 million.
Yeah, so we're really happy that we were able to get the deal done and get it announced and executed, and it really is a turning point for the company as we really refocus our efforts on Manhattan. Mineral Ridge, we really did spend a lot of last year really trying to validate the opportunity with Mineral Ridge and kind of came to the conclusion that the economics are just very tough. Ultimately, the long-term value is not there at this point, and we just needed to really kind of pivot our focus to Manhattan because that really where's the value is, and we didn't want to dilute the company anymore by with the kind of the distraction of Mineral Ridge. So yeah, the deal signed, anticipating closing before August 25th. The payments are staged out where the initial deposit that's actually due by tomorrow, and then the balance of the 4.3 million on top, so $700,000 is due by end of day tomorrow as the initial deposit, and then the balance of 4.3 million due by the 25th on closing. And then there is a $1.5 million holdback, which is split into two payments, 750,000 on 3 months, 750,000 on the 9 months, and then a final payment on the 12-month anniversary, $1 million payment on the 12-month anniversary. So total 7.5 million. Yeah, and really the timing couldn't be better. We're coming to the tail end of our initial phase one drilling program here, which we're going to continue aggressively. We're not going to stop drilling. We're going to move into phase two. And then beyond that, we're in the process of securing, and we're going to be adding another rig here in September 1st.
So then I want to talk about corporate strategy here because, look, in all fairness, the trend in the sector has been more companies acquiring projects, especially these near-term production assets. And when we talked late last year, you had outlined that Mineral Ridge could be a near-term production asset. But I see in the news release, it actually said that the estimated significant annual carrying costs were very high. So that's why you wanted to eliminate this. Talk corporate strategy here. If this could have been a near-term producing asset, why not keep it and try to get it cash flowing for you?
Yeah, so the economics of Mineral Ridge are tough, and really the only way to really make it work is by building the mill. So there are significant annual carrying costs, and those have been really tough on our balance sheet and kind of diluted the value that we had at Manhattan because we just had to continue to carry those. And like what we came to the conclusion of, and what many have before us, is that the only real way to make the project work is to really focus on building the mill, which has a significant capex, and it's a significant capex for a relatively small resource today. That's not to say it's always going to be a small resource. That's not to say there's not expansion opportunity outside the mine gates, but just with what's core there, it's small. And in this market, especially, there's always the value proposition of where you can allocate large sums, like $100 million plus capex requirements. And most of the M&A you're seeing in the space today is for resources that are substantially larger than that, or have near-term greenfield opportunity, or near-term or already defined kind of extension opportunities. So yeah, that's kind of, at the end of the day, it just wasn't the right fit for our shareholders and for ourselves, like for the management team, where we saw the opportunity and really the value proposition of investing $10 million in Manhattan and being able to build multiple hundreds of millions of value in market cap as compared to how other assets are transacting was really the core focus.
Okay, so now that you're bringing in this cash, the last time we chatted about the drill program at Manhattan, you said it would be somewhere between, let's say, 6 to 10,000 meters, all in these stages. But from what it sounded like, no pause between the stages. Now that you're going to have more cash available, does that mean we're going to see the high end around 10,000 meters of drilling at Manhattan?
So 6,300 was what we were budgeted for on this phase one. We'll be increasing it to 15,000 is our target by the end of the year at the minimum. And I think that's readily achievable, especially if we add the second rig in September. Ideally, we do have these warrants at 20 cents that I expect will start to kind of get exercised here. That we already have had some exercised. There's been a little bit of price pressure over the past couple of days, but I expect that as news starts to flow, we're confident we're going to be able to get the price up, and we'll be able to kind of get those warrants exercised. And the intention will probably be add a third rig as well, and just be as aggressive as possible, and really kind of continue to push forward into early next year.
Now, how far are you through the current program? How many meters have you drilled so far?
We're just over 5,000 right now.
And what are the targets? Talk to us then. If this is the catalyst for the company, the drilling that, well, it sounds like you just drastically increased the overall planned meters of this year. What are you attacking?
Yeah, so core focus currently for this phase one was this gap zone between the Goldwedge underground and the west pit. And this is the historic property boundary. Just to kind of refresh everyone's memory, really the history or the challenges with Manhattan were really driven by the fact that historically, there was never consolidated ownership of these two projects. Scorpio was able to consolidate ownership in 2021, and with that consolidated ownership, really that is the real driver of this district scale potential. So the core area where we've been focusing is the historic property boundary between the two projects, the gap zone, which is effectively where under the highway. And yeah, that's where we've been focused, and we believe we can add 200,000 to 300,000 ounces just in this core zone. But alongside that, we've been very active in identifying the regional targets for phase two and phase three. And sorry, when I say regional, I mean there's regional in just adjacent to the core resource zones, and then there's regional beyond that too. So it is quite exciting, I think, at this point, with the ability to be able to invest this capital, be aggressive in drilling, be able to define these new areas. One thing we haven't even talked about is the fact that our resource will be coming out imminently. And really the plan or the opportunity is to we're being aggressive with drilling right now, be able to add that drilling to the resource, the baseline resource we're going to be putting out here imminently towards the end of the year and early into next year, and really be able to expand it in the short term. And ultimately our goal is to get north of 2 million ounces here in the next 12 to 18 months. And we think that's a very doable target with what we have. And I think that really would cement the value of this project and really present a really opportune re-rate, especially as to where it's positioned as next to Round Mountain and in the district where you have a number of mid-tiers and what's called smaller and majors for that matter that are looking to consolidate in Nevada and acquire projects in Nevada.
Now, how much drilling of the historic drilling, because I believe there's well over 100,000 meters of historic drilling on this asset, how much is being filtered into this initial resource that's coming?
Yeah, so I think it's just over 1,800 holes and 140,000 meters of historic drilling is going into this current resource. So a lot of confidence, and it really does kind of validate it in a lot of ways. Unfortunately, because some of it is so historic, we can't necessarily call it measured, but the benefit is that the density is there. So with some confirmation drilling and with this second rig or third rig that we add, we'll be able to kind of work towards getting those into the M&I category pretty quick.
Okay, so near-term resource, but then all this drilling that you're doing to add to that resource. What else is coming then here, Zayn? That this is all drilling focused. So when are we going to start seeing some of these results?
In the coming weeks, I could say the results are coming imminently from drilling. Beyond that, we're going to be doing just kind of an overview of our exploration targets and really the ultimate kind of a recap and ultimate opportunity of the project. And then the resource, yeah, those are really the core catalysts here in the short term. And I think all of those things will show the market kind of the real upside potential here and really get things moving.
Okay, and you're cashed up for all of that. So then, Zayn, one other quick news release to touch on is May 28th. Leo Hathaway joined as a director and heading up the technical team here. What's Leo doing in terms of helping to guide the drill program, the catalyst coming?
Yeah, so it's really great to have someone of Leo's pedigree on the team. Leo obviously has a great track record, had numerous exits with the Lumina Group, most recently selling Lumina Gold, and just kind of having that pedigree, and also that approach and strategy, I think aligns with what Scorpio's corporate strategy is for Manhattan. We want to build this project up. We want to really define a world-class resource, both in terms of scale and grade, really build something that we believe stands apart from a lot of other things in Nevada. And then having Leo with his technical expertise and his kind of track record and experience in doing that, taking the projects kind of from these earlier stages, defining the resource, packaging them up, and then really setting them up to be sold is really the opportunity. So he's been an invaluable resource, and he's rolling up his sleeves and getting very involved. I think he's on his way down to site as we speak. So yeah, it's exciting.
So, Zayn, look, as you mentioned, this is in a well-known jurisdiction in Nevada or close to other mines. What is the play here? Is it to build up a resource and start mining it yourself, or is this to use as feed for the nearby mines, or is it simply just as a sale of an asset?
Yeah, so the project is definitely has the scale to stand alone on its own. Like we really do see this as 100,000 ounce a year producer potential. I think the way that we look at it is we're going to work this project like we're going to build it. Like we're going to move this thing forward, build a really strong, a lot of confidence in a really strong resource, strong metallurgy, strong technical kind of foundation. Ultimately, do I think Scorpio ends up starting to mine this thing? Probably not. But that's not to say that that's out of the realm of possibility. I'd say that I think it probably gets taken out before we get there, but I think we're approaching it like we're gonna build it and just be very methodical in that manner. I would say that the Round Mountain opportunity is particularly interesting, just in the fact that you have a mine that's at the end of its mine life or nearing the end of its mine life, and you have a lot of processing capacity, 30,000 ton per day, 30,000 tons per day of processing capacity at Round Mountain, 10 miles to the northwest. That will need to be backfilled and be able to for really kind of keep that going at scale, full scale. So that is something that we see a potential in, and that this project probably would fit really well with that. But is that the only way it could move forward? No. This project can stand on its own and could build a mill and a full processing facility at Manhattan as well. So we're just going to kind of play it out. But really, the focus right now is build ounces and build confidence in those ounces.
All right. Well, Zane, the drilling, that's going to lead the share price as well as this upcoming resource. So I'll be sure to follow up with you when those are released. And I hope that we answered all of your questions. Thank you, everyone, for sending in some of your questions on the back of these news releases. I will post a link to the Scorpio Gold website in the show notes. Feel free to click that link, read over the recent news, and send me any more questions you have for Zane. Zane, appreciate the update today. Thanks for your time.
Thanks, Cory.